Thank you. Let's get on to questions. Thank you so much for your valuable insights and some key takeaways shared. So we've received several questions from our audience. Perhaps we can start with a question for Meagan regarding some of the budget speech proposals. So the first question is, there are murmurs around implementing a wealth tax again. If they should implement a wealth tax, what are your thoughts on how it will play out?
Certainly. So as we are all aware, Joanne, there have been multiple instances of this proposed wealth tax being flaunted in the media. So it's no surprise that it's come up again in this budget round. National Treasury did confirm that they are working with SARS currently to assess the level of high net worth individuals within the country who are currently paying tax to SARS. So as you will be aware, high net worth individuals who do have assets in excess of 50 million rand are required to declare these to SARS in their income tax return, which gives them a good view of where the wealth is currently sitting in the country. I do personally feel like the very narrow tax base in South Africa is mostly made up of individuals who are either high net worth individuals or middle income earners. And currently, the level of taxation for these groups of taxpayers is already quite high. So we're not entirely sure how a wealth tax will play out in South Africa, and I suppose we'll just have to wait and see to see if we have any proposals coming through in future on what National Treasury feels like this might look like.
Okay, great, thank you. Sticking to budget proposals, and something that's very popular in our industry at the moment. What will happen to hedge funds if they are removed from the definition of collective investment schemes?
Yes, definitely. So this will definitely have a massive impact on the hedge fund industry as they currently function as a CIS, right? So if they are removed from the definition of a CIS, they would likely be treated as a company as the tax law currently stands and be liable for tax as a company. What we would like to see from National Treasury, should they choose to remove hedge funds from the definition of a CIS, is a fully formed taxation legislation or framework for hedge funds, which basically stipulates how they will be taxed going forward.
Sure, okay. Another topical one at the moment. I noted that there is some talk regarding changing the rules for South Africans receiving foreign pensions. So can you elaborate on that a bit?
Sure. So currently, South Africans who receive foreign pensions or lump sums from foreign retirement funds are exempt from paying tax in South Africa per the current taxation laws. What we do find is that in several DTAs, the taxation rights are granted to the country in which the receiving taxpayer is resident, right? So these are South African resident taxpayers, and the DTA assigns taxing rights to South Africa. In the source country where they're receiving their retirement income from, that source country might then exempt them from tax in that country per the DTA. And once the income comes to South Africa, SARS is not taxing that income, right? So they're seeing this as the amounts not being taxed at all. So SARS is going to look to close that loophole in some shape or form. So we will see those amendments come through in the next legislative cycle, expected to see that in the Taxation Laws Amendment Act that will come through in 2025.
Okay. Felicia, some questions for you now on two-pot.
Yes.
How does the two-pot system impact death benefits, and what are the options available to beneficiaries who are allocated the death benefit and the tax implications?
So with regards to death benefits, the Income Tax Act sets out the options that are available to a dependent nominee, options with regards to how they can receive the death benefit. So it provides for 3 options. The first being that the nominee or the dependent can receive the death benefit as an annuity. Can use the death benefit to purchase an annuity, The second option being that the dependent or nominee can take the death benefit as a cash lump sum. And then the third option being a combination of both. So the Income Tax Act does not make provision for a dependent or a nominee to transfer the death benefit to another retirement fund. So this means that the two-part system is not brought in scope when looking or when dealing with death benefits.
Okay, that's quite interesting. Next question is it true that public sector funds are excluded from two-part?
No, that is not true. So public sector funds are included in the two-part system. Funds that are excluded from the two-part system include legacy retirement annuities, unclaimed benefit funds, beneficiary funds, funds that had a liquidator that was appointed by 31 August 2024, as well as funds that had no member assets immediately prior to 1 September 2024. So when you look at the funds that are excluded, public sector funds aren't listed there. So public sector funds are included in the two-part system.
Okay. I think that's it for questions for today, and that actually concludes our Tax and Legal webinar for 2025. I'd like to thank the presenters again for your engaging presentations and the insights shared with us today, and thank you everyone for joining us. The survey will pop up at the end of this webinar, and we very much appreciate your feedback, so please take a few minutes to complete that survey for us. And then, as mentioned, we are in the process of certifying this webinar for CPD hours. And with that, thank you for joining us.